Guys, Kill Stokes here. Welcome back to another Trading Edge video. If you guys are brand new, this is a video I put out on YouTube each and every week, showing you the best trading opportunities that are on my radar for the week ahead. I forgot to update you guys. I don't think I did at least, but if you remember that DKC strategy that we were discussing in the beginning of the year, I did finalize it. I am going to start trading it live on April 3rd, which is something I'm very excited about, and I'll try to keep you guys updated on a weekly basis on how it performs. We did break it down in the live room, or the Q&A session the other day. It's a interesting performing strategy. It's not for the faint of heart, to say the least, but you'll get a good idea of exactly what I mean once you start seeing the live results. It's good, it's profitable, but you got to take on some pain to earn that profit. But after all, that's what trading is. So let's get started on the Aussie dollar today. And Aussie dollar is an interesting one because we have a pattern within a pattern. You can see recently price action has been putting in a bearish flag pattern here on the daily chart. And going back to what we always talk about the art of reading candlesticks and how it's boring and something a lot of newer traders skip over because they don't find it to be relevant. Being able to read a candlestick and interpret its story can help you out in patterns like this because you can get signs and clues of when that breakout is likely to happen, especially in situations like flag patterns where they're reverse slanting, meaning a bearish flag can slant upwards, meaning we don't know when it's going to end. If we have the ability to read our candles and take a look at stories like this where we see long rejection wicks to the upside and we can interpret that as being selling pressure, and then of course follow that up with the confirmation of the lower low, lower close, that's a very good sign that, hey, that breakout may be ready to occur. Now, if we do break out here on the Aussie dollar, looking for a move down into our 65 even handle, I can take a Fibonacci extension from our most recent move right here, swing high to swing low. You can see we're gonna have a 127 Fibonacci extension that lines up right with our inside level of structure right here. If you were to bring your volume tool in, we'd probably see a spike in volume starting at that level. Let me just give myself some real estate here. Swing low to swing high. Let's see what we have here. Boom, yep, you can see the void right here, then the increase right when we get to this level of structure. Not a bad level to look for targets at. Now, the interesting thing about this is we have this bear flag here on the daily. If we were to push down all the way to an hourly, we actually have a similar type of pattern setting up within that bigger pattern. So you have a little upward move right here, right? Little bear flag action potential pullback right back into structure looking left. That came after the bigger breakout that we saw on the higher time frame. So if you're someone that uses multiple time frame analysis, you've got your highers and your lowers both pointing you in the right direction. You can go and use your lowers as a way to get involved in that higher time frame trade. Always cool when the market is in alignment. Now, speaking of breakouts, next pair we're going to go to is our Pound Canada. You guys know I've been bullish on many of these pound pairs lately. We did not get the move I thought we were going to see. I expected some type of surprise move from Bank of England. Everyone was thinking left and Bank of England was going to stay its path right, but that did not happen. So we didn't really get any sparks off of the interest rate decision this past Thursday. We do have some officials speaking, I think, on, I want to say Tuesday and Wednesday this week. So maybe that can spark something, followed by some GDP news coming out later in the week. I think Thursday that may be. But yeah, I was surprised that we didn't see any moves. We didn't see any negative moves either, but I thought we'd see more out of the news events that came out this past week. Anyway, here on the Pound Canada daily chart, we're trading right at a previous level of structure high. You can see that our next level of structure is going to be much higher, so we do have room to the upside. If we go down to a 4-hour chart, you can see how price is just hugging these highs. We're continuing to make higher lows. We haven't broken out yet, which could be seen as a negative sign for the bulls, but we also haven't been able to retrace much either. So there is some buying pressure that's still holding things up. Typically, when I see situations like this or actions like this with price action, again, my assumption is that, hey, yes, we're holding at structure, but if that party, in this case the sellers, if the ones that are holding it at structure aren't able to progress, then it's only a matter of time before they give up and we see a move higher. And then all of those sellers and their stops, which are right above there, get triggered and boom, we see that big breakout. So keep an eye for a bullish breakout here on pound Canada. Again, if you're an aggressive trader, you can set yourself up before the breakout. If you're conservative, more conservative, you can trade it during the breakout. If you're super conservative, right, like I am, you can wait for the confirmed breakout and then look for a reason to trade it up. You can see on the daily, there is room to the upside before we get to our next level of structure. So pretty cool buying opportunity here on pound Canada for breakout and or pullback traders. So next up, we're on gold. Gold on the daily chart. This was another pair that broke out during the week. You can see we broke past, right? Broke above, close above our previous structure high right here. We did run into an even previous structure high looking left and put in a nice double top, a classic double top. First spike rejection, retracement, nice hold on the second one, divergence on the RSI. Now, unfortunately, this is not a double top that I can trade because of this violation. And it actually reminds me of a poll question I put up this week, I believe on Friday on social media, about what do you think is more emotionally, or what type of trader do you think is driven more by emotions? And feel free to leave your answer below. I don't think I did it here on YouTube, but the discretionary trader, the one that can use their gut intuition, or the system trader, the one that's trading more of a mechanical system. And I recorded a podcast with it. It's not going to be out for a while because I'm kind of backed up, but make sure you give it a listen, because it's the answer that you think is right may not actually be right. But I'll leave you with that tease for now. By the way, make sure you support the Trading Coach podcast, ranked number 7 this year in 2023 for top trading podcasts out there. I would like to get to number 1 just because I'm competitive. So give it a listen, give it a rating, give it a review. 3 new episodes a week. Make sure you check it out. But here on gold, I'm not interested in a short because of the violation of this structure and the fact that I don't think we really have room to go, and the rules that I have about when we violate structure. I'm not very interested in the long because we've bumped up against the ceiling and we've refused to break it. So typically when you're kind of sandwiched in between areas like this, what I tend to look for are advanced pattern formations, and we have a few forming, right? One, if we go down to the hourly, we're going to have a potential bat pattern right here. I think it's a bat. Looks like a bat. If I remember correctly, I did a quick eyeball test of this before recording the video. Yep, bat pattern. We do not hit. So again, rules again. We do not hit the 618. So that's going to put us on alert for a bat pattern that looks like this. X to A to B, B to C, and a CD completion right here for our completion zone existing from our 886 down to our X leg, and that is going to be a buying opportunity. If we zoom out one more time frame, right, we may have another advanced pattern formation setting. I'm not going to draw it on because this one's really early, but you can see the starting point of this, the X to A, the A to B, the B to C, and if we continue to push down, maybe we'll see this next week if we end up retracing, a CD completion down here as well. So when you see areas like this where you're kind of jumbled and stuck between two different things, these are where advanced pattern formations tend to form just because of the consolidative nature of how they do form. So following up with that, we're going to look at Ripple next, right? A cryptocurrency here. Not that I follow cryptocurrencies, but it's on my list for some reason. I think someone I worked with followed them. But anyway, following up on that consolidation, you can see that price has been consolidating here on Ripple. And we have 2 potential advanced pattern formations forming. And the cool things about these advanced pattern formations is that if you're good at identifying them, because they take multiple moves to complete, you can identify them well in advance and prepare yourself for different scenarios. So in this scenario, you're probably seeing this already if you're familiar. We have 2 potential setups, right? Setting up. We have one, which is going to be this, our swing high to swing low. Another bat pattern, just like gold, X to A to B. This one bearish, B to C, and C to D. Again, keeping an eye on this zone for your selling opportunities. And or if we go down, we're going to have a potential Gartley pattern. This is going to be a bullish Gartley pattern. I'll draw this out in a few. I'll change the colors up a little bit as well. That way, not too confusing here. But an X to A to B, B to C right there, and a CD down here completing at our 127. And of course, that range, that kill zone going from our 127 to our X leg. So a potential selling pattern right up here, a bearish one if we go up, a potential buying pattern, so a bullish one if we go up. As of right now, couldn't tell you which one is going to complete, but again, our job as traders, we want to do our analysis in advance. That way we're prepared, and you can rehearse this over and over again, where if we move up, this is what I'm going to do. If we move down, this is what I'm going to do. That way, when or if the patterns do complete, you're not caught off guard, you're not in that state of distress, you're just in a normal state of trading stress. So I hope you guys enjoyed this video. I hope you guys that watch college basketball are enjoying the madness of March. Woof, some crazy games. Make sure you support by hitting that like button and leaving me a comment below if you have any questions. Also, remember, check out that Trading Coach podcast. We're doing some really cool stuff there. This week, we released 3 episodes, The Cost of Freedom, a sneaky reason why traders fail, and what pisses me off about trading. Next week, we got some more fire coming your way with becoming obsessed with data, asking yourself, am I good or am I lucky? And then statistics, probability, and edge. So make sure you support the show, the Trading Coach Podcast, available on your favorite podcasting app.